Happy Saturday to everybody. I missed the Friday show. I was running around with some errands, but here we start right here. Here's a word of the day. Inveigle. Inveigle is our word of the day. It's to persuade someone to do something by means of deception or flattery. It's a verb, inveigle oneself or one's way into gain entrance into a place by persuading someone with deception or flattery. So there is our word of the day. We start off every program with our word of the day, and we close every program with our quote of the day. So that is where we are right now. So we move on. Let's take a look at where markets ended. We had quite a wake-up call, and I'm going to show you on the chart. There was a couple of warning signs that if you heeded them, you could have protected your account a little better. So here is technology. The big cap techs are pretty much down except for Qualcomm. And I'm not sure if this is Monolithic Power. Right down here in the corner, KLAC and Lam Research were up, Home Depot. So there was a smattering, and healthcare got a nice bounce here, and utilities continue to perform well. It's unsure if this is for safety or for the AI. So that is the story with that one. And now I'm going to go over and look at crypto. So we had a big adjustment in Bitcoin. It really is looking like the 22,000 was topping out pattern. We always are willing to adjust because anything can happen at any time. Ethereum is pulling back as well, pulled back from 37, 35. It looked like it was going to hold around 35, and it has pulled back further. And so everything in the crypto world seems battered as well. So we'll go over here and look at our chart, little bigger chart, and you can see 119, one was over 120, and it looks like a double top at 119. I thought there was a double bottom that it was going to take off, but I guess that is not the case at this moment. It's now down to 112,997, and we'll just take a quick look at Ethereum, even though we looked at it on the other chart. Here we go. So this is Ethereum. Had a bit of a pullback here into June, came up here, got above 37, and it could not go any higher. So that's what we have right there. And now I'm going to share another screen here. We're going to go into a little more depth on the annuity since we do not have a weekend update material quite ready. So this is annuity, goes up when the market goes up, does not go down when the market goes down, and it just kind of climbs these stairs all the way up. Beats index investing by about 5%. And I know there are some advertisements out there that are kind of disrespecting annuities, but let's just go over some of the pros and cons. You get a guaranteed income for a set period, or it could be for a lifetime. You get tax-deferred growth, earnings growth. You can customize annuities with riders and other features to meet your specific needs, such as inflation protection or survivor benefits, protection against outliving your savings, and there's no contribution limits like 401ks, IRAs. So if you have a big savings, you could put that in there. You can avoid probate. Annuities may allow you to avoid potential lengthy and costly probate process. Um, and there's principal protection like we've been talking all along here. Now we go look at the cons or the minuses. Some annuities may come with various fees, huge fees, administrative fees, mortality expenses, and investment option fees. Limited liquidity. Annuities are generally not considered liquid assets. Your money is locked up, and there may be surrender charges if you really need your money for some emergency to move forward. They may be complex. Annuity contracts can be complex and difficult to understand, requiring careful review and potential professional guidance. Potentially lower returns. Some annuities offer guaranteed growth. They may not keep pace with inflation or generate high returns as other investment options like stocks, but stocks always have the market risk. Anything can happen at any time, as what happened in 2008. Taxation, earnings grow tax deferred, withdrawals are eventually taxed as ordinary income. Tax treatment varies depending on the annuity is funded with pre-tax or after-tax funds. There is inflation risk. The fixed income payments from some annuities may not keep pace with inflation, eroding your purchasing power over time. And then there's the opportunity cost. Investing in an annuity means the money is tied up and not available for potential investment opportunities that could offer a higher return. And you need to evaluate your risk tolerance, financial goals, and your retirement plans. It can be a good mix in your portfolio, and you can use a number of different mixes. So that is why you should sit down with your investment advisor, financial advisor, so we can design a program where it'll work with you. So that is our little talk on annuities for today, and we'll probably come back to it at some point. So we are now going to go over to our charts. So this is a QQQ, and you can look, it was getting, the NASDAQ was getting quite spread out above its 50-day moving average. Once it gets 7 to 9%, there's always a risk for an adjustment. So the news of the low amount of jobs being created really caused a hiccup in the markets. So anything like that can lead to a sell-off. And the sell-off may continue for 2 to 4 days, or maybe even it gets more protracted, as we saw over here. Now, what is the warning sign that I was talking about? So this is the warning sign right here. We had a big pullback to the 10-day moving average. It tried to come up a little bit, and then it continued up here. And then it went higher, and then we had a stalling action. Stalling action means there's a sell-off. And this is what happened. This is your second warning sign. This is the first. And here's the second warning sign. And went up, I believe, yeah, this was Thursday. It went up on Thursday, but once again, it had stalling. It wasn't able to hold those gains. And so those are some of the warning signs. Tried to go higher on Friday and then had a vicious sell-off after that, falling to its 10-day moving average. Now, may not end there. Quite possibly could fall to its 20-day or to its 50-day. So you might want to take some profits in your stocks, and we will continue marching on here. Here is the equal weight in the NASDAQ. So this was Thursday. Big warning sign, sliced through the 20-day moving average, and then a big gap down on pretty good volume on Friday. Fell below its 50-day moving average. So those are some big warning signs. I'm just going to take a look at IWM. This is the small cap 2000. Huge gap down, came below its 200 and the 50-day moving average. But we've had some, look at this big volume right over here. That should have been a warning sign. And we've had a number of selling days on the small cap. Take a look at the S&P 500. We've got a big gap down below the 20-day moving average. A number of traders use the 20-day average as a guidepost. If it falls under the 20-day, they get out. And if it crosses back above it, then they get back in. So what do we have over here? We have 3 selling days in a row, and we have 3 volume that just kept growing more and more each day. So these could have been warning sign here. When it fell through the 10-day moving average way back here, that's one warning sign. This is another one, much like the NASDAQ, it was a stalling day. So it couldn't keep up near the highs, even though it went up here later. Look at the volume down here. The volume was kind of muted. So rising on lower volume is actually a bearish signal. One of the bearish signals that I had talked about before. So let's take a look at RSP. RSP holds up a little better than the S&P 5. I could be wrong there. Maybe the S&P only went through, it only went through the 20-day, didn't go through the 50-day. So back at the RSP. So we got some pretty good volume these 2 days. And then we got a good volume on selling day right here. So that should be a warning. It did go up, get close to the pivot zone here on this day, but the volume was low. It was lower than the other days when the market was going up. So that should be a warning sign. And then the next day, we got a higher volume on the selling side. Well, this was the previous day, I'm sorry. Previous day, high volume on the selling side above this red line here is the average daily volume. And then we got attempt to move up, but it was on lower volume. So, and then right over here, we got a selling day here, another selling day. The volume is picking up. Volume really picks up on, I guess that would be Wednesday. Volume shoots higher on Thursday. And these are all warning signs that something is coming. The institutional money managers are unloading their portfolios. So that is that. I'm going to look at RKK. What is happening here? They sell down to the 10-day moving average. Another pullback to the 10-day moving average. And then here they slice right through it. So you had 2 pretty good volume days on selling on RKK. And it has just sliced through its 20-day moving average right there. And then I'm going to take a look at the Dow Jones. Dow Jones drops to its 50-day moving average, down 1.27%. And now I'm going to try to look at some sub-indexes. So this is utilities. Utilities was doing pretty well. It did sell off, but it had a strong bounce back off of its 10-day moving average. We'll take a look at the other utility. Continues up 0.15%. So if these two indexes are holding strong and the rest of the market is falling down, this is where the strength really is. And you can see that the volume just kept growing. So the buying volume kept growing. So this is where the money has been moving. We'll take a look at the VIX. So we had a big spike in the VIX over here. So you had a warning sign right here on the VIX. Big spike up. And we got a gap up here. Eventually that gap will fill, but it looks like this gap over here has filled. And when this goes up, the S&P 500 goes the opposite way. So that is the story. The VIX is up 9.87 on Friday. Now we'll take a look at this. You don't usually see this, but I think there's a worry that the Fed should have taken some action. So the 10-year Treasury has really dived down here, down 3.21%. Usually, if the interest rates go down, stocks will go up, but it did not happen this way. So let's look at the 20-year. 20-year, a big gap down under the 200-day moving average, down 2.85%, drops to 3.51 interest rate. We'll just go back to the 10-year, and it drops down to 4.2 something. I'm not sure why it isn't showing up here. Yeah, 4.23% on the interest. Take a look at the financials. Big gap down on financials here. Down 1.85%. KPWB looks a little better. Aerospace sold off to the below the 20-day, but then bounced back strongly to get back to the 10-day. Communications pulling slices through their actually gaps down below its 20-day. We'll see if it touches the 50-day. Take a look at Meta. Is trying to fill the gap here on the earnings gap. So if you bought a Meta over here, the rule is you would sell it because it has fallen through the low of the gap up. Risk management is the key here. Always want to protect your inventory. And Google is down, Alphabet is down here 1.44%. Take a look at real estate. Real estate is down. Biotech, interesting, biotech is bouncing up. The money is always moving somewhere. It doesn't just leave the market. The other biotech is up. You just need to be able to follow and find out where the money is moving. Software dives to its 50-day, got a little bit of a bounce. Technology slices through its 20-day moving average. Infrastructure sells off and then fights back, trying to get to the 20-day. Semiconductors fall below the 20-day. So NVIDIA stays right near the 10-day. Broadcom, the ticker symbol I was looking for. It's this one's up, bounces off the 10-day. Airlines really dived down nearly 3.57%. Industrials, they gap down and try to fight back to get to the 20-day. Consumer staples, they were up near 0.5%. Healthcare, they're up 0.5%. I think it was Eli Lilly I was seeing moving up 3% on the day. Building materials, they really gapped down. Mining and metals, they're selling off as well. And uranium, they gapped down to the 50-day and trying to get back to the 20-day. So let's take a look where the big money was moving. Monolithic power systems, strong move up here with earnings up 33%, 2% earnings surprise. Appfolio, look at that huge move. Earnings are up 23%, 7.54% surprise. Reddit, 850% increase in earnings. Gaps up 17.47%. I didn't show this one yet, but MicroStrategy, their earnings was an earnings surprise of 33,182% earnings surprise. They went from a negative 76 cents to $32.52, but still they dived down, and that I think that was mainly because of Bitcoin's huge move down. So we'll have to keep our eyes on that one. iRhythm Technologies, earnings up 48%, nearly a 35% earnings surprise, and they are up 17.68%. Workiva, earnings up 19%, big gap up, and big strength in that one, up 32% for the day. We're not going to go through all of these. There's 20 items on here. Mr. Cooper in their mortgage refinancing, up almost 12%. Earnings came in at negative 2%. So I guess that was a lot better than people estimated. SBX Technologies, up 7.66% and 16% increase in their earnings year over year quarter. RBC Bearings up 3.22% on 12% increase in earnings. We'll move to Carper Technology. They had a big sell-off. I'm not sure if this was on the day that they looked like the day before they reported earnings, and it's bouncing back 3.36%. DR Horton getting up to 150, up 5.22%. Their earnings came in a negative 18% about a week ago, and it gapped up on that news. Here is the rocket companies. We've got an institutional ant showing up right here. Earnings were down 33% year over year quarter. and it gaps up on Friday, up nearly 12%. And that is that. Right now, we're going to move over, see if there's any interesting news. Ray Dalio sells the last of his stake in Bridgewater and stepped off its board, according to the Wall Street Journal. Brunei's sovereign wealth fund now owns almost 20% of Bridgewater Associates. Amazon Q2. Let me get back to the right location. Amazon Q2 EPS $1.68 versus $1.33. And still they dive 8.27% on Friday. Beazer Homes. They dive as well, down 7.66% on a 1-cent loss. It doesn't say what their estimate was supposed to be. Boot Barn, $1.74 versus $1.55. Initially, they move up and then they sell off and bounce back in the middle off of their 50-day moving average. On to Clorox. EPS 287 tops consensus of 221, and still they could not move up on that news. Floor and Decor, a recent IPO a few years ago, 58 cents versus 56-cent estimate, and they rise a little over 2% on that news. Magna International raised annual sales forecasts and top second quarter estimates. And they were up just barely on Friday. Got some pretty big blue towers here. Moving on to Tesla. Tesla car sales in Sweden, Denmark, and France fell in July for the 7th straight month. And they gapped down 1.83%. Top Golf Brands announces resignation of Artie Starr, CEO of Top Golf. See if this one will come up here. We're going to pause for a second. Here, when I go to pause, it generally comes up. They're down 12.22% on their earnings, and possibly on the resignation announcement. On to Las Vegas resorts, which are having trouble attracting people to Las Vegas. Here is Wynn, down 1%. Las Vegas Sands. Holden kind of steady. And MGM Resorts fall to the 50-day moving average and bounce. Macau's Gaming Bureau reported that July gross revenue from games of fortune in the region was up 19% year over year to 22.125 patakas, I believe is how you say that word. On to energy. This is where we actually saw some green on the charts. Chevron Q2 adjusted earnings, $1.77 versus $1.70. And they fall just barely. ExxonMobil beat Wall Street estimate for Q2 profit as higher oil and gas protection helped the top U.S. oil producer overcome lower crude prices. And still they fall 1.79%, fall to the 50-day moving average and have a slight bounce. Bloom Energy Q2 EPS 10 cents versus estimate of 1 cent. And they initially sold off to their 10-day moving average and fought back to the profit zone. So you could have almost bought on the bottom here and then sold up here. On to Edison International, quarter two EPS 97 cents versus 91. Got a nice move up there, up 1.94%. Thursday was a huge volume bar, followed by pretty close to the same thing on Friday. So this is kind of where you can see where the money is moving. Could be a rotation underway. NOVIX falls greatly. Their earnings came in at 0, so they were pretty flat. They had a quarter two EPS loss. It says 13 cents versus a loss of 15 cents. On to First Solar, quarter two EPS $3.18. Tops consensus of 262. So First Solar got some nice little bounce, highest volume in this base right here, up 5.29%. On to financials. Coinbase quarter two EPS $5.14 versus $1.26. That is a big number. And still it dives down 16.7%. Maybe their guidance was a little light. On to Reddit. Reddit EPS is 45 cents versus 19 cents. And it jumps up 17.47%. On to LPL Financial, which has been trending. Big money has been flowing into that over the last couple of months. And it dives down. Earnings were up 16% of $4.51 versus estimate of $4.23. I guess people were looking for a little bit more flow there. Rocket. See if we can get Rocket to fly here. Rocket quarter two EPS 4 cents versus estimate of 3 cents. And still it takes off. We got an institutional ant showing up here, up nearly 12%. We looked at strategy earlier. Quarter two revenue 114.48 million versus estimate of 113 million. They have 628,791 Bitcoin holdings and total cost of 46.07 billion or 73,277 per Bitcoin year to date. So that is a story, and we're diving on Friday. T0, I'm not sure if this will come up, but T0, a pioneer in digitally native capital markets infrastructure, will launch T0 Chain, next generation of blockchain purpose-built for compliant issuance, trading, settlement, and tokenization of real-world assets. On to healthcare. We looked at Eli Lilly, and let's take a look at NVO. Novo Nordisk goes up slightly. Medicare, Medicaid plans to experiment with covering weight loss drugs. The Washington Post reported state Medicaid programs and Medicare Part D Insurance plans will be available to voluntarily choose over Ozempic, Wegovy, Mounjaro, and Zepbound. On to Biolabs. Biorad, a quarter two adjusted EPS 261 versus estimate of $1.73. And it gaps up and streaks higher, up 17.63% for the day. Illumnia, quarter two EPS $1.19 versus estimate of $1.01. You would think that would go up, but no, it pulls back to its 50-day moving average. iRhythm Technologies, quarter two EPS 32 cents versus a 48-cent loss. And yes, it does gap up quite a bit. It's up 17.68% on the day. On to MetLed Toledo, quarter two EPS $10.09 versus $9.60, and it sells off 3%. You had your warning 2 days before as the selling had started. So it's obvious that somebody knew something before the news came out. Pfizer and its German partner BioNTech on Friday lost their bid to overturn the ruling that COVID-19 vaccine infringed on one of Moderna's patents. Pfizer was up slightly, 0.86, and BioNTech sells off 0.15%, and Moderna is off 6.61%. ResMed, quarter four EPS 255 versus 248, and it is continuing up 2.67%. Stryker, quarter two adjusted EPS $3.13 versus $3.07, and it gaps down on that news. And now we move on to industrials materials. Eastman Chemical, quarter two EPS $1.60. And pause for a second while I bring my news back up. So Eastman Kodak dives on this news. They miss their estimate by 13 cents. On to Huntsman. Huntsman, quarter two adjusted EPS loss of 20 cents versus estimate of 12 cents, and it is off 5% on that news. Next, we got Ingersoll Rand, quarter two EPS 80 cents in line with consensus. And so it dives on that news to 11.4%. Maztec, quarter two EPS $1.49 versus estimate of $1.40. It initially dives and tries to fight back. It does get it above the pivot zone, still off 8%. On to VVX. Awarded a $4.3 billion contract to support U.S. Air Force T-6 Combs program. And Will Scott Holdings, quarter two EPS 27 cents versus estimate 35 cents. That's got to be a big ouch, down 13.7%. And then finally, in technology, media, and telecom, we start out with Apple. Quarter three EPS $1.57 versus $1.43. Initially moved up and then it dived afterwards, down 2.5%. We did look at Appfolio, I believe. Quarter two adjusted EPS $1.38 versus $1.28. and it skyrockets 19.36%. Cloudflare quarter two adjusted EPS 21 cents versus 18 cents, and it stays within the range. We had a gap up the day before, so it has now filled that gap, bounced off the 20-day moving average. Still looks like it is in a power zone here. DXC, quarter one adjusted EPS 68 cents versus 62 cents, and it falls 5.51%. 5.9, quarter two adjusted EPS 76 cents versus 65 cents. I missed one of my letters there. And it dived 6% on that news. They were looking for much more. Data, quarter two EPS 20 cents versus 14 cents. And it dives down 18%. KLA 10 core. I was looking for this one earlier. Quarter four EPS $9.38 versus estimate of $8.55. It had sold off the prior day, and it's trying to bounce back here. Marginal gain at 0.87%. Lumen Technologies, quarter two EPS 3-cent loss versus estimate of a 26-cent loss. Still, they're down nearly 17%. Monolithic Power, quarter two EPS $4.21 versus estimate of $4.11. And it zooms to the top of its pivot zone. So it's not really in a power trend here, but if it could get this 10-day moving average to move up a little bit, it would be in a power trend. So it's something to look forward to on Monday. You can take a look at that and see if it continues up for the day. And finally, we close with Roku. Quarter two revenues, $1.1 billion, top the $1.07 billion estimate, while it guides quarter three revenues, 1.2 to 1.17 billion. And Roku dives on that news, dives 15%. If I believe Netflix would be a better issue to be in, but it is expensive. It's been pulling back as well. It was off 7 cents. We looked at Apple, Amazon. We didn't look at Microsoft. Microsoft looks like it's trying to fill the gap here. And that'll be all of our chart analysis for the day. But once again, this is what a power trend looks like. The 10-day is above the 20-day. The 20 is above the 50, and the 50 is above the 200. So I'm going to pause for a second to get to my quote of the day. So our quote of the day comes from Epictetus. He's a Greek Stoic philosopher. And his quote is, "Wealth consists not in having great possessions, but in having few wants." So that is our quote of the day. And thank you so much for joining us. Once again, go out there and enjoy your weekend. If you can lift up somebody emotionally or in their need, please do so. We all need to help one another and lift each other up so we can make this a better place to live. This has been Money, Markets, and Motivation with Mike. Have a great weekend.